All right, folks, welcome. Wait, what do I normally say here? It's how long has it been since I last uploaded? 38 days. I I didn't mean to stay away for that long. I'm sorry. That's my bad. I got a new mic, so it took me a while to get a new one because I had to find the proper one or at least a decent one, as quick as possible. Because other mic, what it was doing for some reason, it would have like stutters whenever I would talk, and it would literally just cut my voice in between the recordings. And mind you, I had like 15 videos ready to upload, and then I'm listening to the videos back. I'm like, I can't upload this. They can barely hear what I'm saying, and I just basically had to throw the mic away and get a whole new one. And here we are. I'm back. I don't even know what episode this is. I think this is episode 30. And wait, let me actually see because it's been 38 days, so just give me a little bit of time. About 30 seconds. Yeah, we're going over this right here. Central banks, interbanks, smart money, and retail. We're going to be going over the different levels of that. Right, right, right. So, what are these levels? The central bank, the interbank, the smart money, and retail. And what's the pyramid scheme? Who's on top? Who's in the middle? And who's on bottom? Like, how does that work? Well, first of all, central bank, all the way on top. All the way on top. You know why? The central bank is literally the puppet master. You might think, "Oh, it's the interbank, it's the institutions and private equity." Oh, no. Oh, no, no, no. That's the central bank is the real puppet master, okay? Every country has a central bank. Central Bank of I think it's called European Union, you got the Central Bank of America or no, it's not, no, it's called Federal Reserve, Federal Reserve. Then you have Central Bank of India. All those central banks control those markets for that country, okay? And whenever those central banks get involved in this market, I'm not going to sit here and say that they're not here. They're always here involved. But whenever they're directly involved, like puppet master type involved, controlling this market, oh, there's nothing you can do. There's nothing anybody can do. They can dump this market all the way down to 10,000, like it's at 25,000 right now. They can dump it at 10,000 straight shot, like nothing ever happened. That's what I mean by that. The interbank is a level below that. This contains stuff like institutions, private equity, what's the other one? Private banks and stuff like that, like JP Morgan, Goldman Sachs, BlackRock, Vanguard, all those people. Those people. Yeah, you know exactly what I'm talking about. Those, yeah, them. You know what I'm talking about. But that's what the interbank is. Interbank level is considered smart money. Okay, so you got central bank, which is puppet master, like the true full control over the markets whenever, they want to have full control over these markets, but they're always present. I'm not going to sit here and say, "Oh, the central banks are never here. Well, we're just here to take over their role as a puppet master." No, that's not true. They're always here. But the interbank is a level below that. Okay, mind you, the interbank still is a puppet to the central bank because the central banks are the what? The puppet master. They control this entire, as we call, market or this little candlestick chart here. They're like, look at this bozo looking at candlestick charts. He probably can't even calculate where price is going based off of numbers. That's how they look at us, for real. Like, that's literally how they look at us. Anyway, below interbank, okay, which is still controlled by central bank, is smart money. Interbank and smart money are both smart money. You're probably like, what? That doesn't make any sense. When I say interbank is smart money, it's simply the larger version of smart money. And when I say larger version of smart money, I mean the smart money that has more money, hundreds of millions of dollars, billions of dollars, maybe close to even trillions of dollars. That's the bigger smart money. But when I go below that and just say smart money or smart money traders, that'll be me, or that'll be you, or that'll be the other person that you're going to share this to, or that'll be the other person that you're going to share my channel to, or that'll be another ICT concept trader. Same thing. You're still smart money, but you're just a smaller version of it. And what I mean by smaller version is you're trading, I don't know, $10,000 live accounts or 150K funded accounts. That's small. Okay. So to most people, that's huge. Trading a 150K funded account, passing it, getting a $10,000 payout. That might be huge to some people. But just think up there at the interbank and stuff like that. The institutions like, look at this measly guy. I think he just made a hit the jackpot with a $10,000 payout that's trading on a 150K funded demo account. If you guys didn't know that, funded accounts are literally demo accounts, by the way. And they just clown on you. So that's when I say interbank is smart money, it's just the bigger version of smart money. Now, what actually is smart money? We're going to be going over both of those levels again, interbank and just smart money or just ICT concept traders, the smaller version of you know the intellectual traders. Okay, smart money is just intellectual traders, and then you have interbank, which is the larger intellectual traders. Okay, or what's the word? educated traders. Yeah, that's the word to describe it. When we say smart money, they know what's going on. That's why it's called smart money. They know what's going on with this market. They're smart. Duh, right? It's smart money. I don't think I have to say anything else after that. Smart money, they're educated in these markets. They know where price is going to go. They are way more advanced than any other trader on the planet. Smart money traders. That includes me, you, and anybody else that's going to watch anything dealing with ICT concepts. Okay, because ICT concepts is smart money concepts, and smart money concepts rule this whole market. Overstood? Okay. All right. All right. You may not believe that, but I believe it. It works for me. And if it works for me, hey, I'm sure gonna believe it. Anyway, retail. That's below central bank, below interbank, and below smart money. Retail is a dumb money. Support and resistance, dojis, indicators, EMAs, candlesticks, stuff like that. Okay. That's dumb money. Get it? Smart money, dumb money. You see the difference? Dumb money, institutional perception, if the data ranges, institutional sponsorship, fair value gaps, order blocks, offset distribution, offset accumulation, retail, dojis, candlestick patterns, EMAs, Elliott wave. That just reminded me of the joke that ICT made about Elliott wave. It was pretty funny. You guys gotta go watch. I think it's in like the 2024 mentorship. I'll probably put the link in the description. It's a funny joke. Anyway, but you now get how these markets function. Okay, each level. This is what this small lecture is really for. Okay, because I'm not like teaching you a concept or anything, but it's just a passive understanding on how controlled these markets are and what you are. Yeah, that's one thing I forgot to tell you. Who are you in this level of markets? These four levels. Who are you? You're below the interbank. You're just smart money. Okay. Now, if you get up there to I don't know, you get hired at the QQQ Invesco, and you start trading on a $100 million live account, and you're hedging orders, then yeah, I guess you can say you're part of Interbank. But other than that, you're down here with us, with the educated minds that know about this market and know how it moves, know how it functions, and know how it delivers. You're just a small version of smart money, but you still know. You know how this market operates. So congratulations, you're with us. I wish I can give you a round of applause, but I have noise suppression on, so I can't even clap, and it's not gonna hear it. But you you get the point. But retail, dumb money, smart money, simply smart money, but just smaller money. Interbank institutions, private equity, private banks, stuff like that. Goldman Sachs, J.P. Morgan, BlackRock, Vanguard, all those people. Okay, that's above smart money. Then you have the central banks, which is the true puppet masters that are above interbank. Once they directly interact with this market acts crazy like nothing ever happened. You can see this market drop from 25,000 to 20,000 in an instant. Not even in an instant, maybe a couple hours. That's how fast that's going to happen. Okay. But this is just a small little lecture, just a small one, just so you can understand how these markets really, really operate. Okay. And I'm going to give you a little bit more before I end this video. When I refer to interbank or whenever we mention institutional, all that really means is that we're seeing the institutions interact with the market. Okay, so we have confluences like institutional sponsorship, and we have what's the 60-day range called? Oh, interbank price delivery algorithm. You hear the word interbank? Yeah, that first word, interbank price delivery algorithm. Okay, that's an algorithm that is programmed by the interbank. Okay, in which that algorithm is also smart money. Whoa, pretty interesting, isn't it? Yeah, very, very, very interesting. Okay. So all those confluences, right, that's dealing with institutions and the higher ups and stuff like that, that is simply just the institutions or the interbank level interacting with the market to give the what's it called? The smaller smart money traders an opportunity to actually trade. Okay. So this algorithm that the interbank created that is now running this market completely, or about what is it, 80% of the market? I remember I showed you, but this algorithm controls 75 to 80% of all markets. Yeah, pretty insane, isn't it? Trillions of dollars, hundreds of billions of dollars every single day controlled by one singular algorithm, the interbank price delivery algorithm. Okay. This algorithm, what it does is think of it as the all-seeing one, but it's still controlled by central bank. Once central bank gets in here, it's like, oh, sorry, master, I didn't mean to. It's literally that. Okay, this algorithm may control the market full time, but once that central bank comes in, it can get fired at any time. Get fired on the spot. It might come in at 9:30 ready to get his work on and start manipulating the markets. "Oh, no, 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 you can't do that around here. We got a interest rate change. We're changing interest rates to 4.5 to 0." Then the whole market just drops, okay? So that central bank is still on top of the algorithm. And when I say that's on top, that is literally the puppet master of everything in this market, okay? But that algorithm created by the interbank is used to offer smart money traders, so human traders, human interbank traders, human small smart money traders, opportunities to interact with this market. So whenever you see price head up to an order block or head up to a breaker block, that's price or the algorithm giving you an opportunity, giving smart money traders the opportunity to trade or to have a potential trade opportunity. But you just have to know how the algorithm functions, how it delivers, how it refers to certain confluences, just basically how. And when I say how, I mean like how is it actually going to go to your target? Is it going to hit a breaker, hit an order block, hit a fair value gap, create a meter rebalance? What is it going to do? What is its how in order to actually reach your sell side liquidity or reach your fair value gap that's unfilled or reach your order block that price can potentially bounce off of in reverse in which you're going to take another trade? How is it going to do that? That's the how. The what is I think the how and the what are basically the same thing, but the where is where's price going? Okay. Well, when you got your how and your what, how it's going to do it and what you're going to use to do it. Now it's your where. Where is price going? Is it going to a short-term low, long-term low, intermediate-term low, fair value gap, order block? Where is it going next? What is the most probable target with the highest profitability available? What target is that? What is that draw on liquidity, or just that draw? Because not every point is liquidity. I gotta stop saying that, just so you guys won't get confused. Because an order block is not liquidity. Okay, mind you, if you're saying an order block is a draw on liquidity, or any sort of PD array is a draw on liquidity, you're wrong. Because PD arrays, as I mentioned earlier, they are used to offer smart money traders opportunities. Okay, that's what PD arrays are used for. Okay, that's the algorithm's excuse to say, okay, we're gonna act like we're using the PD arrays to offer smart money concept traders opportunities, in which that's what they're actually doing. But that's just a primary excuse to say, oh, we're using these reference points that we created in the past to continue, moving price, to continue its programming. That's all it's doing. Okay. But what was I on to? I think I was going to where. Yeah, on to where. Basically, you get where. I just said everything. But when is price going to do that? When is it going to do your how and what? And when is it going to go where you want it to go? When, such as IPTA data ranges, when, such as macros, when, such as times, I was about to say time zones, when, such as kill zones, and I think there's some more timed confluences, yeah, such as opening ranges and stuff like that. I feel like there's more. There has to be more time-based influences. I feel like there is. I think that's really all I can name right now just from memory because there's over 120 concepts that I know and still haven't even finished this channel yet when it comes to uploading all those concepts. But you get what I'm saying. This market is fully controlled. Central banks on top, interbank. In the interbank level, you have the algorithm that offers the interbank level and the smart money level below it, the human traders within those levels trade opportunities. That's what the algorithm does. That algorithm lies on the interbank level, but offers human traders within the smart money and interbank level. Mind you, both are smart money, but whenever I say smart money, I'm just referring to the lower version of smart money, which is, funded accounts, $10,000 lives, small stuff compared to them. They offer those human traders opportunities to take a trade or to hedge positions. Okay, if you want to say that, to hedge or to offset their positions. When I say offset, it means close. Okay. So to either offset positions or accumulate positions. Very simple, right? Nothing too hard. So that's it for this little lecture. This was meant to be very insightful for you, just to because I feel like I didn't really put much emphasis on telling you how this market is controlled. I would tell you it's controlled, like within the mentorship, but I wouldn't tell you how. So I think this should really touch on that and pause on that because I know some people are gonna be like, huh? Oh my God, pause. But yeah, hopefully this smaller lecture touches on that just a little bit. Or if it does it a lot, then hey, it does it a lot. Then that's good for you. You really took a lot from this little lecture here. But this was meant to be very, very insightful, just so you can get understanding on how controlled these markets are and how they really function and how you're interacting with it. So now that you know, I'll be in this video here, well, this episode really, and I'll see you guys in the next one. Good luck and good trading.